Don't forget to subscribe to Basement Tales. Just go on Apple, iTunes, or wherever you get your podcasts and hit that subscribe button. We release a podcast every Thursday. That way you'll be sure not to miss an episode. Welcome to Basement Tales with Sam Jackman, Charlie Einsman, Ed Grass, and Sandra Delancey. We have fun telling crazy but true stories about turning the worst possible property disasters into bags of money. Along the way, we'll pass along some important lessons to help you make cash on real estate. Sam and Charlie walked away from cubicle hell 25 years ago. Starting with no property, they created their own Clear Sky group of companies, sold hundreds of houses, bought dozens of rentals, and made millions in hard money loans. I'm Ed, a big firm litigator until muscular dystrophy made me find a hobby other than suing people. I miss it. Sandra's the normal person here with a real job plus some rentals. Her decades of friendship with the group, from office flunkies to property gurus, might help keep us all humble and focused on learning something. I wouldn't count on it.
So is that like roles you guys take on in business? Good
Yeah,
cop,
pretty
bad cop?
much.
Yeah.
Unintentional.
When is Sam the bad cop? He's never the bad cop.
Well, so Charlie, it always comes that it's Sam who's caused whatever tension there is. So Charlie's there to diffuse it.
Yeah, I don't know about that.
He might be emotional with people about matters, but when it comes to real problems, it's Sam. It's Sam.
You've been getting short-tempered, I've noticed, in dealing with government people in particular. You're sending these emails like, look, there's no rational reason this should have taken 6 months, and then you start emailing them every day, and they don't seem to take kindly to that. So I guess that way, yeah, I guess you do cause some problems.
We're seeing some changes in the market, right? It's slow now, but the institutions are starting to get active. We got a call this week from a group. We've got 2 people. We've got a bunch of different calls this week. I was thinking, Charlie, about the notes for sale from a certain financial institution that doesn't want to foreclose directly on their lenders, on their borrowers, but wants to parse that out to people like us to buy those notes. So that is interesting.
Bad people,
bad guys.
To foreclose.
They need some bad guys because in 08, they had enough of being the bad guy, and this team that's in office now doesn't want to see any bad guys show
Does
up.
the bank's name rhyme with Rel's Largo by any chance?
It does.
Yes.
It does.
Oh God, that was an absolute guess.
You are absolutely right. Yep.
That's funny.
Yeah,
That's funny.
and they're coming up with a whole roll that they're selling of their bad loans, so they don't have to be bad guys.
And it's WTF without the T.
Yeah.
Wow.
So we got that, and then we have folks interested in institutional folks expressing interest in purchasing all of our rental assets in a roll up.
Oh, how'd that worked out, huh?
Oh, that's
There's
a third call then. Okay,
yeah,
and there's a third
we're
one.
getting calls from people who are finding us on the internet and who want to participate as investors. That's
Like
interesting.
multi-million dollars, not just the onesie, twosie.
Yep. Who want to park money? We're getting all kinds of calls.
Wait a second. On that last one, are there any Nigerian princes involved?
Nope. They're like real deal.
Right. No Nigerian princes, no lottery winnings,
None
no collecting money from estates. So nothing being bequeathed to us, just real people, real life people that we can trace back.
People finding us to get loans online. We got a lot of activity this week. But the last one isn't institutional, but the other activity is like larger market activity.
Yeah.
So we're seeing no houses selling and institutional activity. So
Because no houses are selling, people have more money to do something with, trying to figure out what to do with it.
That's exactly what's going on. Yeah.
My theory about the institutional stuff is that these are big REITs or big funds that have to invest in real estate, and regularly they would go in office space and whatever, but the whole Amazon COVID effect has just blown that up. So they probably have been pulling money out of that. And now they're like, okay, I have umpty $1 million in cash. I don't want to buy more office space. Why don't I buy residential stuff? And then I'm invested in real estate and I'm diversified and whatever. I mean, that's just a theory, but it would make some sense because why didn't they do this before? I mean, why is this post-COVID that they're going into this? I mean, maybe because interest rates, I don't know.
No, I think, and I think you hit the nail on the head. I think a lot of these bigger institutions, whether you call it a REIT or whether you call it a hedge fund or whether you call it a newer fund or whatever, or even a pension fund, these guys are sitting on a lot of cash and they have no idea what to do with it. But they do know that they have to do something with it. So I think that's absolutely right.
Yeah, it could even be broader, right, than just the real estate thing. They figure I'm not going to put it in the stock market at this point. I'm not going to put it in this or that. And real estate's the new exciting thing. I get residential real estate's the new exciting thing. But the returns were so big over the last 12 months. Do they think the returns are going to keep up with that?
Well, I think they're looking for more of a return on the NOI. So they're looking more of a net operating income return and plus maybe they can get some equity growth out of it. But I think they're keying on the cash on cash NOI return. And if that solves their problem, then they'll just go ahead and buy it. And then if it appreciates or even depreciates, I don't know that they're concerned about that.
Oh yeah, well they could write off the depreciation. Yeah, I suppose there's that aspect of it.
If it goes down in value, they can, but I don't know.
Right. Well, but I guess a hard asset like that, if we do head into inflationary territory, at least it'll hold its value, and maybe they're locked in at low interest rate. Yeah, I don't know. It's an interesting time for all of that.
Well, what can you do with these guys? I mean, the market's flat right now, or kind of flat right now. There's not a whole lot to buy. So there's not much new coming in. You have your existing portfolio that you said you might be looking to sell off. So what do you do with these investors?
Now, have they actually made an offer, or are they just a lot of yap?
We're at the yap.
Oh, okay.
Yeah.
Okay.
Yeah. We're just at the yappity yap stage.
Okay.
Yeah.
I mean, you got to start with that, but you got to pull a trigger at a certain point, and make a decision.
Yeah.
I bet the whole beginning of this will have gotten cut off of this thing because of all the probably illegal things that were being said. But yeah. So I'll say again that you guys got through the Prince George's County tax lien. You guys actually got a property. It's interesting because you bought or the group bought 25 tax liens and 24 paid back, but one didn't. So what happens in that situation is the court goes ahead and issues a foreclosure deed, and then you get the property and you can rehab it. And so the actual cost of the property was pretty low because it came through a tax lien. And this is sort of a good entry level property that there's a lot of demand for. How is the demand, Charlie and Sam, for sort of entry level? This is a duplex up in
this is
Maryland.
but wait a minute. This is a good segue, Ed, into maybe explaining what tax lien certificate investing even is and how we even got to this point.
Yeah, the quick version of it, and we've talked about it a little bit before. Basically, in a lot of jurisdictions, everybody knows there's taxes on houses. And in a lot of jurisdictions, the county or the locality doesn't want to go through all the work of going after people who haven't paid. So if you get behind on your taxes a certain amount, 6 months, a year, 2 years, the jurisdiction will bundle all that up, put a lien on your house and sell the lien to an investor and pay a certain interest rate to the investor. A lot of times there's an auction for these liens, so the interest rate actually gets bid down through that process, and that's a whole other story. And then the investor goes and hires an attorney to foreclose on the house, which sort of wakes up the person who has the tax lien. I better sell the house, or I better get a loan to pay it off, or ask a friend. And most of the time, people, when they're under that situation, find the time and money to pay off the taxes, the investor still makes the interest on the time that was outstanding, but and the person gets their house back and the jurisdiction gets paid. So they're excited. They've got their tax money back. But if for whatever reason the person can't pay, and a common scenario is somebody passes away without heirs. People have left the country. There's a surprisingly decent number of scenarios where people don't end up paying. And in this case, so the group bought 25 of these liens, was getting, in this case, I think it's 20% interest because of the way these liens worked. And one of them, after a year of putting out notices and dealing with the court said, okay, they're not coming, so we're going to foreclose, and the investor gets the actual house. And so then the investor has to pay the taxes rather than getting the money back with interest. But you get a house, and depending on how it's set up, it can be quite a low amount of money. So this may be something like $50,000 cost for this house, which once it's renovated might be closer to $300,000 unless the market tanks. So even with a significant renovation, that's a pretty good return. And I call them the booby prize, sort of jokingly, that the other 24 that paid off still paid back a lot of interest. So that was the worst case scenario, was getting 20% interest on the investment. And the best case scenario, if it happens for the investor, is to get the property. So this is a little bit of a surprise, given usually the hit rate, I've always heard people say 1 in 100 that you would get a property. But you can have 25 and the one falls in that, or sometimes in some circumstances, it just happens to be more. And we obviously try to target a certain sort of investment for the higher likelihood that it's going to happen. If you have a tax lien on $1 million house, there's a good chance the person's going to pay that off at some point, or a bank will pay it off, or they'll sell the house. So it tends to be the smaller properties like this one that there's more of a chance. So anyway, that's the version of the tax lien investing, which it takes a while and effort to learn it, but this is now a property that can be rehabbed and sold. But this is, I think, interesting. Then the reason I raised it was, what do you do with a property like this in this market? Do you rent it? Obviously, it could go into that portfolio you guys are talking about selling. Do you do a real cheap renovation and rent it? Because you'd certainly be over the 1% rule on rent.
No, there's no percent that works in Prince George's County. That is a place to never rent anything ever.
And primarily that's because of the eviction rules, right?
Oh yeah, totally. Yeah. Because we only have one rule: no pay, no stay.
And that rule doesn't apply in that county.
Right. It doesn't apply, and it doesn't apply. Yeah, show up, relax, and don't pay, and just call it a day. Yep.
That is a place to leave.
Yep. So any
business other than sell your assets there.
Yep.
And do you have to get, and I don't know, Sandra, if you've dealt with this in DC, don't you have to get some sort of permit or something to rent in Prince George's County? Is that right?
You do need a permit, just like in DC. That's right.
DC too.
But not in Virginia, right? At least in our area of Virginia, you just rent it out, right?
No, that's right. Yeah.
And I guess if you have enough properties in Virginia, certain rules apply automatically. There's certain extra.
It's possibly 5. But even if you're abiding by those rules with a single property, they're not onerous.
Right. They're logical.
They're logical. There's no issue with those rules if you comply with them. They just got no motivation to help you as a landlord in Prince George's County maintain your property. So,
was it hard, Sandra, to get the permit as an individual person?
Well, no. I mean, as an individual person, well, we did it as a business, so we have a
Yeah,
LLC.
but I mean a
Okay,
one-off.
but no,
Yeah.
we had to get the place inspected. We had to, get some. We did like a virtual inspection, walked around the place, and the guy, looked at things and told us they had a fire extinguisher and a carbon monoxide detector, a couple other things. And other than that, we a basic business license. So we had to register the business, get the property inspected, and that was about it. Now we're registered, as a landlord in DC.
So, and did you start most of that through the internet, or was it hard?
Yeah,
Did you have
just
to
right
go and
online.
wait? Mhm.
Well, I mean, there are lots of, like wizards or whatever on the internet that kind of walk you through the process. Not to say that it's simple to understand the wizards, because you kind of have to go back and forth a few times between two of the local what is it, government agencies here to get things done. So we spent a lot of time between government agencies, but finally we got it right. Remember, that was the thing where we registered the wrong type of business, and Sam bet me that I
Oh,
couldn't get my money back.
did you ever get
I
it
took
back?
the wrong end of that bet.
Yeah,
Really?
we did. We did. We
I've
did.
seen DC refund some stuff sometimes. They're definitely better than they were 10 or 15 years ago. That's for sure
Right.
in handling these things. And you obviously you're a business person, but you don't have a law degree. You were able to figure it out by reading the instructions and all that
Yeah, the
stuff. So it's
wizards are
certainly not
helpful.
impossible.
They
Yeah.
they try to map it out pretty clearly, what you need to do to get through the process. So sometimes, one agency doesn't talk to the other agency, and it's difficult to go between the two. So you have to walk next door with a piece of paper that, said I was just next door. And that's DC government, maybe other government agencies as well, to get things like that done. But once we got through it, it was, not a bad experience.
Mm. All right, so that means no rental in Prince George's County for you
Not
guys
if I
on this
have a
one.
say in it. No, sir.
So I think you have a say in it. But so then the question is, what's the market like for a sort of entry level properties? This
I think it's
particular one's a
great.
duplex.
Yeah, I mean, you have a house that's FHA ready and entry level. It's so hard to find a nice home in the DC area that's in good condition, safe. It's good. I think it's going to be real good.
Mhm.
That's got to be the lowest price point, closest to the city spot, around 300 grand for a nice safe townhouse. The house itself.
It looks like a nice neighborhood and all the
Yeah.
other. This obviously the yard doesn't look so good from the pictures
No,
because a
not
lot of
great.
times people haven't been there in quite a while. I think is probably, but the neighbors all seem in good shape, and of course they'll be thrilled when one of these places, and that's another aspect of the tax lien, DC in particular, there's blighted properties that are sitting there that nobody has any connection to because everybody's moved or left or don't even know they've inherited it or whatever it is. And so, this from you have overgrown weeds and stuff, and it's a duplex. So the poor fella or lady next door, there's a fence down the thing, and their yard is perfectly manicured and lovely. And then there's this place that's, I bet, has been vacant for 2 years.
Yeah, they'll be
Probably
glad
be
to
my
see
guess.
us. I think
Yeah.
they'll be glad to see us.
Well, you need to go
Yeah.
in there first and see how much you need to spend on it, right?
Yeah.
Fix
So
it
we
up.
would guess that this house between 75 and $125,000.
Oh, okay.
Just looking at the exterior photo and given the size of the house,
Yeah, it's a 3-level.
so there could be a lot going on in that basement. Certainly.
So you know
Not
nothing
sure-
about the
sure.
property. You know nothing about what's inside.
No.
Charlie, you
And
didn't
if it's
break in it.
occupied, we won't know about the inside for a long time.
I thought usually Charlie kind of breaks in or does something.
I got a good break-in story if you guys want to hear it.
Okay.
Okay.
We're talking about other stuff, but I've got a great break-in story if you want to hear it today.
Sure. Well, I'll just say a quick thing to close that up. If there is somebody in this place, just so people understand, just because you get ownership of a property and the person, say, doesn't have a lease, there could be somebody squatting in there. It could be somebody who is related to the property, and you have to go through an eviction process. Most jurisdictions, they call that a tenant at sufferance. And so you essentially become a landlord against your will. And in a place like Prince George's County, that could take 3 months to go through that process easily.
If they just left furniture in there, they may claim the occupancy, even if they're not physically there with no power on. And the basement could be leaking. The whole thing could be a mess. They could leave leave a $3 sofa and suddenly have to evict the sofa.
Well, that's why it's so exciting. Oh, you get a house for $50,000. It seems free, and it is pretty amazing. But you have to have the capital to be able to deal with the basement is full of mold or the eviction process, whatever. So it's a little gambling is involved, and it could be a okay return or a fantastic return. And this meets the Sammy Plan method, which is and I love this method. Like I always thought as a business person, you put money at risk, like in the stock market or a restaurant, and it does well, you make money. It does badly, you lose money. The Sammy Plan is no matter what happens, you make money. It's just a question of how much money you make. So the margins on this, it's the $50,000 is not going to get lost. You could tear the house down and sell the land probably for that much, but and so that's a great way of investing. I've been very impressed by that over the years. So anyway, but let's hear Charlie's story, because now we're going to have to figure out how do we get in and when do we get in on this property. Let's hear Charlie's tale.
Yep, just another basic B&E. So and I'll go through the numbers too, because you guys are going to absolutely lose your minds. But so this is, of course, another foreclosure story. We have the foreclosure moratorium going on, as we all know, and it's kind of expired. And so the federal backed loans cannot foreclose, right? So VA, FHA, Freddie Mac, Fannie Mae, and USDA, they are not allowed to foreclose, with one caveat: if the property is vacant. So there was an auction today in Prince William County. It was an FHA loan. And so it was done by one of the bigger law firms, Samuel White. I think I can say that on air because they would probably like me advertising for them.
It's public record. Sure, it's part of the public record.
And so, of course, I went to do the OC check today. And if you guys go back to one of our earlier podcasts, to key or not to key, I, of course, was 95% sure the property was vacant. So I show up. And of course, the property was vacant. So we have, of course, our key chains, various keys on our chain. And so what happens is the property preservation company will come and rekey a house if they deem the property is vacant. Well, indeed, this was the case. So this property preservation company rekeyed the house to the 67 key. So for you guys out there, if you're ever buying a bank-owned house, or if you ever thought that a house might have been foreclosed in the last 10 or 15 years, please change your locks, because odds are, like I said before, we have the key. So in this particular case, the 67 key got me in the house. It was an N unit, 2-level townhouse, 3 levels, and it was built in 2012. So I opened the front door and I was nervous, really nervous, because when I opened the front door, the house was loaded. It had furniture in there. The appliances in the kitchen were stainless steel. The only problem with the kitchen was all the appliances were open. So the refrigerator was open, the oven was open, the dishwasher was open, the cabinets were open, as if somebody had gone through the house. And so I was like, oh man, maybe this house isn't vacant. So of course I'm banging on the wall. There's no power, by the way. So that's one of the other reasons how I knew it was vacant. But I'm still a little nervous because the house is loaded with furniture. So it felt like somebody had died in the house, or, because there was a bed on the main level where somebody was sleeping, but it wasn't a main level bedroom. So anyway, so one of the keys got me in the house. I went downstairs. I go upstairs because for some reason, when guys enter houses, they immediately go to the basement, as opposed to when females enter a house, they go upstairs because they want to see the bedrooms and the nice bathroom. So that's kind of a weird thing, right?
Okay.
Anyway, so I go upstairs. There was a hole in the roof, and so water had leaked in the entire drywall of the upstairs ceiling. So that needed to be done. So the overall renovation of this house was about $25,000, because when I get in these houses and I do a breaking of an entry, like I'm not supposed to do, please don't have me arrested. And Ed would defend me in case I was arrested. Thank you very much, Ed.
I'm not sure I could after this recording.
Right. After this admission.
After your admission.
Plea deal.
It gets better.
Yeah.
It gets better. After the admission, you might not want to represent me. So anyway, so I go through the house. The entire drywall ceiling upstairs is absolutely torn out because evidently the roof leaked. Mind you, the house is built in 2012. So I finally exit the house because it had to be a quick up and down because I was nervous because I thought that maybe somebody was in this house. Luckily, it was daylight because I don't do this stuff at night. So as I'm leaving the house, I lock the front door.
He's not a cat burglar.
Yeah, I lock the front door. I come out. Of course, my car is in the driveway. And so what's happening coming down the street? A bunch of nosy neighbors. And they were so talkative, it wasn't even funny. So I'm here trying to rush to get to the auction because I only have at this point 20 minutes to get to the auction, and the auction's like 15 minutes away. So of course they stop and they have to give me the history of the entire house. And so evidently the house that was built in 2012, all of the houses in that particular subdevelopment needed roofs because the builder used shingles that were defective. And so every single house needed a new roof. This particular house the roof hadn't been replaced, which, oh, by the way, made sense because the leaking on the top floor just didn't make any sense in the 2012 house, right? So new roof, it needed carpet on the main level upstairs. The kitchen was good. It could have went with the kitchen. Maybe one of the bathrooms needed to be upgraded. So my estimate, because of the roof being about $7,500, I had a conservative renovation number of $25,000, okay? The ARV of the property was $570,000. So after you did a $25,000 renovation, you did a $10,000 buying cost. Selling costs at $570,000 was about $23,000. And we're only estimating 4% closing costs because we're realtors. It's a lot more if you're not a realtor. So the selling costs were $23,000. The holding costs were $15,000 roughly. And I had to put in a profit number. So I put in a very conservative 7.5% profit number, which was about $40,000. So the house was worth about $570,000. All those numbers tallied up was $103,000. So if you subtract $103,000 minus $570,000, I got a bid amount. I'm sorry, it was $113,000. So if I subtract $113,000 from $570,000, I got a bid amount of $457,000 at the courthouse steps. Okay. So I go to the auction, and even though our market from a retail standpoint is very, very slow, the people bidding on houses at the county courthouse steps, their irrational exuberance is prevailing, right? So there were probably 25 bidders. I absolutely wasted my time, but here's what happened. The winning bid, so the opening bid was $446,394. Remember, our bid is about $457,000. And that includes a profit number of $40,000. Well, the winning bidder was $497,000, which was, oh, by the way, $40,000 more than we were going to pay for it. And that was at a 7.5% profit margin. Okay. So then what happened? They bid the profit out of it. So you know me, I'm a big dummy, right? So of course, my buddy, Samuel White, his name is EW. I've known him for probably 15 years. He was there. I haven't seen him in years. We're chuckling it up. And so after the auction happened, the buyers came by and they signed the contract with my lawyer friend, right? The guys that bought a 497. So you know me, I'm sitting there listening to the LLCs that bought it because I've got to take notes on everything. And I said to the two guys, I said, congratulations. What are you guys going to do with the property? And this was the first time buyers. I'd never seen them before. I'm thinking they're going to buy it. 500 is worth 570. They're just going to go ahead and renovate it and move into it, because it's an owner-occupied buy. Well, they go to me, yeah, this is a good investment for us. We're going to go ahead and flip it. I said, okay. I said, that's great. I said, wonderful. So, and that's sort of how we left it. And so even though the market might be cooling down, the bidders at the courthouse steps, because there's such limited inventory, these guys are bidding these things up so that there is no profit margin if the market stays the way it stays. And so, just another tale of a B&E, because I knew everything about the property. I knew exactly down to the penny on the renovation budget. And I even put in there a very, very conservative 7.5% profit margin. And so we still got outbid by the profit margin.
So if I'm understanding you correctly, that roughly they paid full price. So if things go the way you expect, they'll get the house for $0 of profit.
That's right.
If they don't lose any money.
Well, and of course, I guess now, do you think they knew enough that they knew that and they're hoping the market's going to keep going up? Or B, do you think they were clueless? Or C, I guess A and B?
I don't know, because one of the things that's going on at the various, at least in our area, at the courthouse steps, is people are bidding each other up so high that they're not bidding to win the property and make money. They are bidding to outbid somebody else, thinking that if they outbid somebody else, that just because of a default, they're going to make money. Whereas they don't realize other people are bidding to drop the property on them so that they either break even or lose money so that they never see these guys again. And so this was my first experience seeing these guys buy a property. So that's probably what's going to happen. And so it's very not nice.
Yeah, well, I guess you get
yep, sorry. Yeah.
And
well,
so
I'm sorry.
I
I was going to say you get the emotion of an auction. Like anybody can get very emotional at an auction, and so you don't think rationally, or you don't have the right information, or some combination, and somebody's trying to be malicious and run up your bid.
For sure, there's definitely malicious folks out there. And the other thing I think they might have done is, just like everybody else has been doing and getting bailed out, is they bid on a we call a 10% com. So they bid on the future value, right? Whereas the only way we know how to do business is we do business on a present value. So we buy what's called PV. These guys are buying at FV of at least a 10% future value, which, especially going into the winter, in a market that we think is peaked, I'm thinking that's probably not a very good strategy.
Right. Well, because at least your profit margin, this goes back to the Sammy plan I mentioned before. If you get a sudden 10% turn down, or you got to hold it a long time, or you missed all the mold in the basement, which is possible, anything could happen. At least, okay, well, I lose my profit margin, but I don't lose my shirt. And it's irritating to then do the work for no profit margin. But at least in your scenario, you've got a good chance of making money, and a question of how much. But your worst case scenario is not that bad. It's just maybe wasting some time. So I don't know. I guess a lot of these people have gotten away with it because the market has been going up.
Yep.
So they bid at sort of neutral value, and then by the time they get around to finishing it, they make 5% because of their 10% because of the market run up.
Yeah,
well, that's the fish that got away from you, Charlie.
Yeah, I have a lot of fish getting away. I think the fish that are getting away are salmon, and they're swimming upstream, and then the grizzly bears are getting them.
And I know Charlie is not above getting the carcass as it floats back down the river, half eaten by the bear.
I guess. Yeah.
Well, thank you. What another inspiring auction tale there, Charlie.
It's
dangerous out there if you don't know what you're doing.
Another B&E.
Absolutely.
Yeah.
Not for the new investors like me.
Maybe not.
No.
Not yet.
If you see Charlie out there, walk away.
There you go. And if you like what you've heard today, like us and subscribe.